Let's bring in Greg Gibbs, who's joining us as Forex strategist from the RBS. Let's take a quick look at what the Australian dollar is up to, because along with the incredible rally that we've seen in equity markets since those early March lows, the Australian dollar has really been going, to use a quote from one of our former treasurers, gangbusters. Are you sceptical about the sustainability of this?
Yeah, sure. I mean, the strength from the lows now has got to be over 20%, so it's a massive rally for any currency. It's got to be up there amongst one of the strongest performing currencies over the last couple of months. To answer the question, yes, I am sceptical that it can be sustained, but I'm not going to fight it at this point. I feel like a lemming at the back of the herd to some extent. We're going to keep running with the herd here.
Towards the cliff,
because there is some momentum behind it. Risk appetite is up. The market is looking for alternatives to the dollar, and the Aussie's got some positive story behind it as well.
The market is looking for alternatives to the dollar. Why is the story for the dollar so bad? And of course Jim Rogers will have lots to say on this as well, because he's been predicting a currency crisis may be upon us with regards to the dollar. Why do you think the US dollar is not wanted to be held right now?
Well, I think it's not just the US dollar, it's all the major currencies really. I mean, they're all in the same boat, pursuing the same policies, this virtual zero rates, quantitative easing, and as Jim mentions, it involves printing money in a sort of euphemistic sense.
Lots of other countries are printing money too.
That's right. And that's why I'm not particularly enamoured with a lot of major currencies. But the reason people are looking at commodities and the Aussie is because you still actually have some yield, you still have a normal policy in that kind of sense. It has that benefit to it, and that's why we're seeing this huge rally in risk really over the last couple of months.
Come in here, Jim.
Well, Greg, I own some Australian dollars myself and have for a while. Well, where do we go if we sell? I mean, I want to sell my US dollars. I want to sell a variety of things. Tell me a currency. I'm happy to do it.
Yeah, look, as you mentioned, where do you put that $100? And I don't think there is a clear answer to that question. I think it's all about a balanced portfolio, I think, really. For me, I think, the last couple of months you have seen a lot of risk appetite come back onto the page. And if you look at things like the Aussie dollar, we're right back where we were pre-Lehman's, the bankruptcy last year. And that, to me, is a sign that we've got a lot of optimism priced back into asset prices generally. So I have a concern that that optimism back in the market, there are still significant risks to the global outlook. And even the central banker governor in Australia, Stephen, yesterday, while he had a lot of positive things to say, still put some question marks over the durability of the recovery occurring in China and how rapid will be any recovery which occurs in the global economy. And to that mind, I think there is question marks over how sustainable is the recovery in commodities and the Australian dollar.
So which currency?
Jim.
Which currency? Sorry, go ahead.
Yeah, Jim, I have a question for you. I mean, when you talk about currencies, as you said earlier, that's a bit of a dangerous game, isn't it, for most investors? I mean, really, if you go to the commodities story, it's a pretty simpler story. There's not as much timing involved and probably less risk, don't you think?
Well, any story that's not risky in the investment world, I would like to know it. I've been having trouble with the investment world for 40 years finding things that are not risky. Currencies may be safer than anything, quote, safer than anything else right now. These people know what money is, and if they don't know, they should be learning, because if I'm right, you're going to see a lot of currency problems in the next decade or two, and people need to understand what's going on. Governments around the world are doing their best to destroy their currencies, many currencies, in fact, and people need to understand that. If they don't understand it now, they're going to find out, but they're going to find out the hard way.
Money's worth less, understood. Yeah.
Greg, just want to get back to one of the top stories today. That was the record contraction in quarterly Japanese GDP for the first quarter. The dollar-yen has barely reacted to that. Why do you think that is? Is it because investors are looking past this data to future quarters and trying to pencil in a bit of a recovery in the Japanese economy?
Well, the yen rarely reacts to any of its economic data, to be honest with you here. And yes, I mean, we all knew this was going to be a horrible number, and it actually slightly beat expectations, if that's possible. But certainly, the yen reacts to this whole risk aversion, risk appetite kind of trade. It essentially has a current account surplus still, although only just. And I guess, on that basis, it kind of lines up in some ways better than some of the other currencies out there. Yeah, but, you know, like, I don't think you're going to see a lot of reaction from the yen here. It's going to react more to the global data rather than its own data.
Risk appetite versus risk aversion. Greg, just hold that thought for 1 minute. I want to get a comment from Jim, because a moment ago you were saying that you have been buying yen. So what would make you sell yen? What might be the trigger points or the signals that would make you want to sell what you're holding right now?
Well, who knows, man? If it goes up a lot more, I'll certainly do so. If the Japanese government changes some of their policies, perhaps. Basically, the carry trade is reversing. That's one reason I own it. The second is because this incentive which the Japanese government has given people to repatriate yen. It worked in America. It made the dollar rally for a year or so. It may not work in Japan, but it's when I look around the world, I don't see many currencies I want to buy. I wish I could find one. Certainly the renminbi. I own the renminbi, but you can't put much money in the renminbi because it's a blocked currency right now.
Yeah, a bit of a difficult one to trade. Can I ask the same question to you, Greg? We're sitting just below the 96 handle for dollar yen. If you are someone who's actually made a bit of a buck or a yen, if you like, out of holding the yen, what do you think should be the trigger point for them to sell, essentially to cash in on their profit?
Yeah, look, the yen, yen was down in the 80s, in March, and we're now in the sort of mid-90s, so it has been sort of moving up and down. Look, as far as the yen's concerned, it is probably going to be one of the more stable currencies that you can rely on. So if you are concerned about this sort of needing an inflation hedge or needing something alternative to the dollar, and if you're concerned about the recovery story running out of steam or this risk appetite losing out again, the yen will perform reasonably well. I think, other currencies out there in the same block are kind of the Swiss franc as well, and the US dollar. They're all in that kind of, when risk comes back becoming an issue, these currencies are going to do a little better. But, looking medium term, there is problems with these currencies as well. And it's hard to, maybe, as you say, some of the emerging currencies with good external balances in Asia ultimately may be the good stores of value.
Like?
Well, even Korea, for instance, has moved into record current account surplus recently. Now, it's a currency which has come under a lot of pressure over recent years and is coming back recently. I don't think it looks particularly overvalued. In a long-term sense, it's probably not a bad currency.
Greg, this news is just out, breaking on the wires. The British Finance Minister Alistair Darling says he sees a return to growth by the end of 2009. Is that going to help the prospects for the poor old British pound?
Well, that's kind of the consensus view really out there at the moment, is that we're going to see a pickup in the global economy towards the end of the year. That's in the price globally. The question is what kind of recovery. That is really what the market's got to grapple with now. And to my sense, I think the market's factoring a pretty normal type recovery, whereas the risk is that this will not be a normal recovery. And next year we're going to see some significant restraints to that growth.
We have to leave it there, but always great to have you on the show. Thanks very much for your time today. Greg Gibbs, Forex strategist at the RBS, and of course we'll get back to Jim and Michael in just a little bit.